Hello traders, welcome to the Capital Gains channel. In this video I'm going to show you three price action strategies that you can use to grow your small account trading boom and crash. So a small account, there is no exact amount that can be regarded as a small account, because my small account can be a bigger account to you, your bigger account can be my small account. So let's not get into figures much, let's just call it a small account, because this strategy I'm going to show you is accurate to raise any account if you use proper risk management and follow all the rules that I'm going to show you. So a lot of traders out there, a lot of channels out there, a lot of videos on YouTube teaches people to trade boom and crash on 1 minute. Why is it so? It looks so predictable and easy. Why? Because we simply have two types of patterns. We have the spikes, which are the bigger candles, and the ticks, which are the smaller candles. So and a lot of people usually teach or rather a lot of people trade boom and crash while aiming for these ticks. Why? Because they seem very easy to spot, but on actual fact it is not that easy. Why is it so? This is so because yes, you can see these ticks, and you never know when a spike is going to come, and these small ticks, they are less dangerous than the spikes, because spikes can actually wipe your account. So this is why in this video we are going to show you how to go to target the spikes so that you can avoid being wiped away. So please note that crash 500, crash in all the crashes, when they crash to the downside, and when boom a spike on boom 500, for example, it will be going in the upside. So we have derived a sort of a formula to say that we buy boom and we sell crash, so that we can be in the direction of the spikes. So in this video, like I told you, I'm going to show you three price action strategies that you can use to trade boom and crash. So in this video, in this example, I'm going to use the boom 500, and you should note that the opposite is true for crash. But before I go into today's video, please, if you're new to the channel, do subscribe so that you don't miss future videos, and also don't forget to like this video and share it if you find it helpful. And also we have an online course, the Ultimate Guide to Forex Trading, which is an online course in which we will share with you the trading foundation, advanced price action techniques, swing trading strategies, as well as day trading strategies. So you can check the links in the description below, and also the brokers that we use and recommend are in the description below. So let's get into it. So when trading boom and crash with this strategy that I'm going to show you, we prefer to use the 15-minute time frame. So let's go on to the 15-minute time frame. So for the first strategy that I'm going to show you, we need the market, is I told you that we will be buying boom. So we will be only pressing buy trades. So for the first strategy, we need the market to be in a downtrend, then to start consolidating. What do we mean when we say the market is consolidating? When we say the market is consolidating, it means that the market is now ranging, is no longer making higher highs or higher lows. As you can see in this case, the market wasn't making higher highs or higher lows in this case. So we need the market to start consolidating. When the market starts consolidating, we then wait for a break of this range, of this rectangle range. So once this range is broken, we then enter our buy trade. As you can see that the market bought, and the spikes will be spiking going up. So we'll be in the direction of the spikes. We don't worry about the ticks, because the ticks won't do a much damage to your account rather than when you're trading against the spikes. So we need market to be in a downtrend, then start consolidating. So this strategy can be even used for other instruments aside from boom and crash. So when you're trading boom, we need the market to be in a downtrend, then start consolidating. Then we mark our rectangle. Once it is broken, we enter our trade. So for our take profit, we can use a simple price action. That is, in this case, we have a resistance here, so that will be our exit point. Or rather, you can use other bigger time frame to see your take profit, but for our entry, we normally use the 15-minute time frame. As you can see, it also happened here. The market was in a downtrend, then we have this range when the market wasn't making higher highs or higher lows. Let me look for another example. As you can see, in this case, the market also started ranging. As you can see, then we wait until the this rectangle is broken. Once it is broken, we enter our trade. As you can see, the market bought up to this resistance area, as you can see. So this strategy is very easy. Even if you are a beginner, you can still use this strategy. All you need to wait for is the market. You need first condition is the market to be in a downtrend. When the market is in a downtrend, we need the market to start ranging. As you can see, the market is now ranging before it actually broke this rectangle in an uptrend, as you can see. So this is it. This is strategy number one. This is strategy number one, which you can use. Let's now go to, so the strategy number one, the market should be in a downtrend and start ranging. When it starts ranging, we draw our rectangle. After drawing our rectangle, we wait until it is broken. Once it is broken, we enter our buy. So let's now go to strategy number two. Okay, strategy number, let me delete this. Let me first delete these objects. Alright, for strategy number two, first of all, you need to we need to spot. In this case, as you can see, we have our nice support area. We have this support area. So what criteria do we use to enter our trade? Okay, in this case, we can use a simple price action. That is, we have our double bottom. As you can see, we have this leg and this leg. So when the neckline is broken, we enter our trade. So we can enter our trade. This will be our entry, although this area can be our entry. So I want you to note something that is very interesting when trading Boom 500. As you can see, we have an uptrend here. Then the market went for a retest. So it was a break and retest. As you can see, it breaks this neckline here. Here, then it rested. So as you can see, we have this. When the market was going up again, it went for this bullish candlestick here. As you can see, we have a bullish candlestick here. Then the market went down again, up, aiming for this bullish candlestick again. Then the market went down, up again, targeting this bullish candlestick. So how can we use this to enter? We had entered here, then this will be our take profit. The market went down, up again, take profit. So again it went down, so the previous high will be our entry. So in this case, we can use these highs. We have this high here, aiming for this candlestick. Sorry, okay, this, or we enter here, then this high will be our take profit, as we'll be aiming for this candlestick, this bullish candlestick. I hope you can see it clearly. Then the market went down, we enter here, aiming for this candlestick. So this will be pure scalping, and the market went up. Then when it goes down, we exit, because we don't know how further it is going to go down. So when it goes up to this area, to this high, we enter, aiming for this bullish candlestick. As you can see, the market did go to that area. So this is how you can, this is strategy number 3. Although it is not my favorite, it is strategy number 3. So strategy number 3, although we said these strategies are based on price action. So but on strategy number 3, we're going to need the help of an RSI. So let's install RSI on our charts. So when you are using MetaTrader 5 on PC, you go to insert, then indicators, then oscillators. You search for relative strength indexes, period 14. So we now have our relative strength index here. So first of all, first condition will be the RSI. We need the market to be below the 50 line, which is the middle line. This one is the 50. So when it is below the 50 line, we know that we are looking for buying opportunities. So now we wait until it crosses back above the 50 period to confirm that we are now in a bullish market. Then we go on our main chart, we draw a trend line. Let's see. As you can see that we now have our trend line. So we wait until this trend line is broken and the RSI remains above 50. As you can see that the RSI was above 50 at this period, and also it broke this trend line. So that will be our entry point. So we can enter here. So on exit, we have 2 options which we can use to exit. We can either target the previous high, or you can wait until the RSI reaches the 70 period, which is the overbought zone. So let's go on to another example. We need the RSI to be below 50. When it crosses back, or you can simply draw a trend line when it is below the period 50, so that when we, as you can see, yes, we now have our trend line, which was broken by this candlestick, and when it was broken, the RSI also was above 50. So when you enter, make sure the RSI is above 50, which is which signifies the bullish momentum. So maybe you don't know what RSI really does. The relative strength index, it calculates how many bullish or how many bullish and how many bearish candlesticks are there when the past 14 candlesticks. So when it is above 50, it means there are more buyers than sellers. It is above 50%. When it is below 50 period, it shows us that there are more sellers than buyers. So it is a bullish confirmation. So in this case, we wait. Confirm for the rules. Once again, we wait until the when the RSI is about below the period 50, the level 50, it shows that we should be looking for buying opportunities. So we draw our trend line, then we wait until this trend line is broken, and also the RSI is now above 50. This is how you can find your buying opportunities. As you can see again, in this case, the RSI is below 50, so which means we should be drawing our trend line. As you can see, we now have our trend line like this. Excuse me, sorry. We now have our trend line like this. So when this trend line was broken, the RSI also was above 50, which triggers our buying, which tells us that we should be buying. So this is how you can trade boom and crash. Particularly this example is boom 500. So again, the RSI is below period 50. We need it to go above 50. So, and also we need our trend line to be broken. Let's see. Yes, this RSI was now went above the period 50, and the trend line was also broken. So this is it, guys. This is how you can trade boom and crash. On exit on this strategy, you can either target the previous high, or you can go for the oversold area. So this is it, guys. This is how you can trade boom and crash. I've actually showed you 3 strategies. Please do practice them so that you can see which one is the best for you. But it will be a very good idea if you can practice them all and you can master them all, or if you can master just 2, so that you can take your trading to the next level. Please, if you are new to the channel, please do subscribe so that we can be motivated to produce more videos. And if you have other topics that you need to be covered, please leave them in the comment section. Then we make you a video for you. So this is it, guys. The brokers that we use and recommend, we have left the links. The links are in the description, and also our course, the ultimate guide to price action, to forex trading rather, but it is more focused one on price action. We have left the links are in the comment section, and also if you want to contact us, you can check in the description. See you in my next video.